My heart keeps on beating for like India. I have a family here. For them, US is my home.
But if you look back in India, talking about finances between family members is not much. Life is uncertain. I may be young today, but you don't know what
Born and raised in Gujarat. That
money is in
definitely
your
helps
blood.
me. Yes, there was a time when I used basically like convert dollars into rupees when I used to like go for breakfast.
Property in India, asset or emotional trap?
Buying an immovable asset, I don't think
Got it.
I buy that.
They have a specially able child. They need to be taken care of when they are gone. So therefore, you don't have an option but look at it from this angle, right? Your child should have access to this asset, God forbid you're not, right? If the answer is no, then who will hold these assets on your behalf?
We are very much aligned on the investment side. I think like aggressive is like what I like. And one question on the side of like the cost for having a trust.
See, in today's world, many things are there on the internet, right? But what value really I bring onto the table is essentially the experience dealing with many families, what they have done. US or India, where would you stay, right? What's your answer? Every NRI lives with a quiet contradiction. Your income is in one country, your heart is in another, and your money is caught somewhere in between. This is Borderless. I'm Nikhil. Every episode I sit down with one NRI. We dig into what's actually going on with their money and we walk it through together on camera, because if it's their problem, chances are it's thousands others' problem too. This conversation is supported by Aspora, and they make sending money home genuinely simple for NRIs. You know the usual drill. The rate quietly shifts on you and fee shows up somewhere you didn't actually expect. Aspora doesn't do any of that. You get the same rate that you see on Google, one upfront fee, no hidden markups. Remittance is just the entry point for them. Aspora is pivoting into multiple other financial products for NRIs, with gold and NRI banking being the next products. Over 10 lakh NRIs are already using it, and they're soon expanding beyond the UK, UA, and the US. Thank you to them for backing conversation like this one. And if you also want to be part of this conversation, there's a link form in the description. Tell me your story and my team will get in touch with you. Thank you, Sagar, for being part of this show. Borderless was something that I started with the whole intention of hearing the community. There's so many questions that were coming in. Thought, why not bring someone onto the channel, real person, real conversation, so that what we discuss today helps many others who's watching this. Really, glad that you're able to join this conversation with me, and welcome to the show.
Thank you, Nikhil. Yeah, pleasure to be part of the conversation. Definitely something I really like about like talking to finance and like just understanding the world of finance. So definitely happy to be here.
Perfect. And Sagar, for the benefit of the viewers, if you could give a quick intro about yourself, right? And what's your current situation?
Sure thing. So hello everyone. I am Sagar. I am basically from Gujarat. I studied there electronics as my engineering background. I got my first set of like experience in corporate in India while working after college, and then I moved to US. It's been almost 12 years now since I've been living in US. I came here as a student, started liking the country, started liking the work culture, got married, have kids, and I've like been in US for like 12 years now. So I see like world from like different lens now.
Great. No, so when you moved to US, did you always think it's going to be for 12 years, or you thought it's going to be a couple of years and then you'll come back? And how does this things change for you now?
Sure. So I didn't come with an intention to stay back. I am gaining my experience in India, and I thought like, okay, what's a good next step? Thought like, okay, I should basically get a master's. I should increase my knowledge in the field, how big projects get handled and stuff like that. So I came to US for those reasons. But then like after coming here, I established myself here. Like I see myself living here. So I didn't come with an intention, but I think like it just like went by so quick. I don't know like how each day passed by so quickly, and like days turns into years now. So that has been like my story here so far in US.
Typical question that I have in people in your situation, right? What's home for you, India, US?
This is definitely a question that I keep on thinking. My heart keeps on beating for like India. Like I keep watching news. I am very much plugged in into like what is happening, the current affairs and whatnot. But I still live in US. That's a reality. I have kids now in US. So while the home is for me is India, I have a family here who is growing here. For them, US is my home.
Got it. And 12 years is quite a long time. Do you still count in rupees when you make a spend, or that phase has moved on?
So definitely there was a time when I used basically like convert dollars into rupees when I used to like go for breakfast. I was like, okay, I spent like $5 at for my breakfast, and then I kept on doing that. But like a friend called me out a long time back, I think like probably like 11 years back. He was like, why are you keep doing this? And then like basically he helped me flip the switch on like, okay, I don't need to like calculate it again and again. I think like I can think of it in US dollars now. So I think now things have changed for me. I think of it in dollar terms rather than rupees.
And given that you have been there, your family is there, etc., what's your long-term goal as elsewhere, India, or very open-ended right now?
That's again like a question that I keep going back to. But I think like having lived outside of India, I think like world has become very open to me. Like I'm not like stuck to like one place anymore. Part of the reason I don't have a home yet is because I'm not seeing myself like situated in like just one place. Like I could move anywhere else tomorrow if I need to. So I'm not sure like whether I'm in US or whether I'm like in India or whether I'm like in a different country. So it's still TBD.
Got it. Okay, so when it comes to money, then in that case, you're an engineer helping build few things for the organization that you're working with in terms of law enforcement and whatnot. Does the engineering mindset kick in with respect to finance, or both is looked at separately?
No. So I think like definitely engineering helps, but I think like as a Gujarati, born and raised in Gujarat, I think like
I should ask
that definitely that just like that definitely helps me. Yes, I don't know, like it says it's like true for all Gujaratis, but I think like my partner keeps on pointing me like the way I think of money is slightly different than like how she thinks. Like she's from Delhi, so we have like got a different set of rules regarding money. But I think for the money wise, I think I'm more of a planning person. So like I need to like keep an eye on like every dollar that we spend. I should have a pulse on it. So very rudimentary, like I track them in a spreadsheet. Like in and out, and then I know like basically like where are we spending, how much are we spending.
Fair.
I keep a fair eye on like how year on year we are like growing investment wise versus like saving wise or and things like that. So that's how I'm doing about finance.
Got it. No, perfect. And given that there are two different styles in which finance is maintained at home, who approaches who in the family or even your friend circle, right? Anything to do with money, is that they come to you for guidance, or you are those kind of person where you don't talk about finances to anybody else? That's for you personal. Many times I get questions from many in the family saying, hey, which stock to invest? I say, I don't help you with any of these things. This is not my forte. I'm not a financial advisor. But having said that, keep getting these questions. So just want to understand, which bucket do you fit in?
I think like, while you are asking me the question, it came to my mind like, okay, I don't talk to about finances in US. Like within my friend circle or like people who I know, they know that I'm like very aware financially in that regards, but like we don't generally talk about finances. Like it's very clear to them like some of my preferences on like things, the way I think of things, but like we don't generally talk about.
And what's your perception of the jurisdiction or the place where your assets are or investments are versus where you stay? Is it correlated or shouldn't matter?
I don't think so. Like it should matter like where I live. Like it's just like it has to be invested somewhere like their growth is like substantial. So not very much on the sides of like it has to be like closer to the proximity where I am. But it has to be like diversified. So like I do have like investments which are like goes like to Japan or like and things like that. So like I keep it diversified, but like the growth is.
Got it. One thing that you want to really take back today, what would that question be from you?
Sure. So I think like I have like a one jam-packed question for you. I think like that has like three prongs to it, and I want to like touch upon like each side of it. So as like a NRI living outside of India, facing like multiple country financial puzzle, I think like US, India, and then again like I see a lot of advertisement of like investment in Dubai and whatnot. So I think like there's like a lot going on in the investment world, and I think like definitely there's like a lot to learn from like different angles and like what suits which person. I think like age is on our side, I think at this point, so we still have like time to invest and like grow the money that we want. So from that like multiple country financial puzzle side of things, I want to like see like a holistic roadmap for like how can we like secure ourselves like financially. So like if something goes wrong, like health wise is like one big thing. The other one I want to ask is like what's the optimal horizon for like us to like split the the investment like between like different countries, like one where we are living and one is like a home country, like what the split should look like. And I think like the third one is like on the side of like setting up a trust. How should we think? What's a strategy for like setting up a trust or a broader structure which like basically helps the family like run optimally at some point?
Sure. No, so fair. We can kind of touch upon it, right? As in, obviously, some of it is more experience. Especially the last question is something that's my forte. I can talk about it very well. That being said, let's look at each one of those points, right? Your first was on insurance, second on how the asset allocation needs to be across geographies, and third, in terms of what else do I need to do? How do I consolidate assets, structure, and so on and so forth, right? Before even I jump into that, Sagar, you've not taken green card or you've not taken US citizenship or anything of those lines, right? Or I
No, I haven't. I'm on a visa, and
do you plan
that's
to?
all we do plan to, like, I think like we have applied for our immigration. It's just like it's going to take a longer time. We are not certain financially like what one can do to like leverage the time that we have on our hands today, that will like set us up for success for in future.
Got it. See, let's pick up the first point, right, in terms of insurance. Now, obviously, I can't suggest saying what is the right insurance for you in the US, etc. But typically, the way I look at it is that, there are two kinds of insurance that one has, right? One is something which is provided by your corporate where you're working. And also there's one which you run those insurance on your own, right? Currently, what's the situation? Do you have a personal insurance for yourself, or are you depend on company insurance?
So yeah, so we do have like a company provided insurance, but I think like those are like for employment purposes and basically like very limited in coverage. But I do carry like a term life insurance.
Got it. No, so we are splitting into two parts, right? I think when you're talking from an insurance perspective, you're looking at from a financial coverage, not your health coverage, right? So, okay, got it. So from a financial coverage, obviously, there are multiple products there are there. Obviously, you have investment linked versus non-investment linked and whatnot. I know these basics are something that you'll be aware of. Obviously, the way you look at covering insurance for the whole concept is this, right? At least this is the way I think of insurance. Life or term insurance is what I would always look at. I wouldn't mingle that with investment I would do separately. I would look at insurance separately, so that much more efficient. And your focus, right, you're looking at saying what happens if I am not there, what is the corpus that comes back to the family, and how do you decide on that corpus is essentially saying what's your potential earning, right? If your potential earning is X, that is what you want to cover for the family, right? Because what I'm trying to do with term or life insurance is that if I'm gone, I don't want my family to be disrupted, which effectively would mean that if I'm providing for certain things, obviously both of you are working, but having said, there's a corpus that is coming from you as well from the earnings, right? How can I complement that is what your insurance number should be, right? If you have another 20 years of your earning life, what that number would potentially do, I would try to get closer to that in terms of my life insurance coverage.
Okay. And then the other aspect I want to ask is like the management of it. I think like having insurances is like one thing, but like getting through it, if when you are not there, how does like one manage on those aspects as well?
No, so very jurisdiction specific, right, Sagar, here in terms of you need to see each providers, right? Obviously, the choice does not go by discount and premium, but who is the one who will give you the best called claim percentages that are there, right? If your claim ratios are much better, I would pay a premium and get them, because tomorrow I don't want my family to struggle because I tried to be penny wise pound foolish, right? To get that, a 5% discount, I'm kind of putting the entire corpus at jeopardy. So those are things that you would look at. Once you're working with an established player, then I think if the procedures are followed, I think it's pretty much seamless, right? That's what I kind of go by. But thereafter, obviously, the important point is that the corpus comes to the family. Now, what does the family do, right? Now, it's a lump sum which is coming in, which is supposed to substitute your income stream. So my point there would be a little different. Is the family equipped to manage finances, right? That's something which really needs to be imbibed, right? I know families who start getting the kids educated about maintaining finance, even give a small corpus and start investing. I think it's in your blood as a Gujarati, but still having that education to kids, etc., will really help. They start valuing money, right? Same thing with spouse. If you're not there, not putting gender into any question here, but just saying that, each person, right, in each family, one person could be stronger on finances, the other may not be. And therefore, is the other person willing to, or does have a basics of managing finances? Because you don't want these corpuses to go in vain when really it needs to serve a separate purpose, right? That's something which I would emphasize more on. What
Get to those
happens,
details.
Sagar, is that what I've seen in India, right? The things are a little different as NRIs. You guys will look at it very differently. But if you look back in India, talking about finances between family members is not much. And the point that you end up disclosing about what you own, what you don't own, forget insurance is one component of it. The other assets also being available to the family becomes a big question mark, right? So having that open conversation really helps. And telling that, say, listen, being very practical, right? Life is uncertain. I may be young today, but you don't know what's in store tomorrow, right? If that being the case, being prepared is always better than not being prepared and taking a shock in, right? So therefore, that knowledge imparting becomes extremely critical, right? What insurance to take and what not, right? As long as your numbers are sorted in terms of what coverage that you're taking, and there's good education in the family to ensure that how to maintain these funds, I think that kind of takes care of protection from a family angle.
Sure. No, I think that covers my point. I think like having like a good amount of like coverage for every family out there, like who is listening. I think like having the
Absolutely.
insurance is like a must for us. I think that's a must.
100%. I fully agree with you, and I know nothing right or wrong here, but I'm not a big fan of someone clubbing insurance with investment products, right?
Investment.
Keep it separate. It's going to be much more economical. You don't need to pay a big price because insurance, it's usually a push product, not a pull product, and therefore the commissions are pretty high for insurance, and therefore your contribution is going to take care of some of those commissions, right? So therefore, in other words, why not just keep plain simple vanilla products? The simpler that you choose as products, it's always going to be easier for family and everybody else, and easy on your pocket as well. And you'll be surprised that when you take a term insurance as a pure plain vanilla construct, it's not so expensive at all.
Yes, no, totally agree. And I think like the reason for me like raising this point is like basically I see a lot of friends who are like high income earners and like they just like miss on this very basics. And hope this helps a lot of people looking into this.
Second point, your question was in terms of how are we looking at from a global allocation or asset allocation perspective, which geographies to go about, right? There's no straight answer here at all, right? For me, the way I would play this is opportunity cost, right? Obviously, what's your risk profile, right? Do you fall in the conservative, moderate, or aggressive investor category, right? Depending on that, you need to see what's your allocation of debt versus equity. Once that is kind of put in place, then the next question is that where do I invest, right? That where do I invest is a question of saying how do I diversify portfolio and where do I have better ROI for the investments that I make. So it's boiling down to that very simple construct, nothing beyond that in my mind, right? Now, today you could say I'm very comfortable with investment in the US. That's absolutely fine. But you say, listen, India is also a growing market. I want to have an exposure there. Great, you should do that, right? That's the way I kind of go about. There's no formula to say 50% in India, 50% in US, or 20% in India, 40% in US, 30% in another jurisdiction. We can do whatever those permutation combination is. Essentially, you need to take a call saying where am I spreading my eggs and what is the return that I'm getting. In the financial world, there's something called as your core strategy versus your satellite strategies, right? What is your core strategy is to ensure capital protection. Then on the satellite investments, there you go extremely aggressive to get multiple excess, so that at an overall portfolio level you're getting a much better alpha, right?
Sure.
So that's one way to go about, right? Now you may say, see, China is a great market to invest because the values are lower and therefore I see a potential. But China is also extremely risky. I'm not actually giving the perspective of China today. I'm just giving you an example to relate, right? It could be China, it could be Japan, it could be Korea, right? Now, so you take that call to say, where should I put in so that if the risk is high, reward should be high, right? And if you have that potential, then go about looking at it. But a more larger construct of your assets should be in a much more safer, highly liquid jurisdiction. Like India is liquid, but US is even more highly liquid, right?
The reason I asked like on like the multi-nation like split is also like part reason is like, yes, you want to like invest in different countries for sure, but like again, your home is India, or like you have a home country where like you want to make sure that you have enough assets or enough investment so that like if ever in the case in the world like something were to go wrong, you have something to go back to and like basically uh, have a nest basket. Again, like this is like coming from the investment perspective, but also like from the security perspective as well. Like if you ever have like be away from your work country, you want to like be home country, like you want to like allocate some assets
No,
investment
no,
there, so that you're not
absolutely,
like
right?
zero there.
Yeah, no. So that's the whole. Again, goes back to the thesis, right? Going back to the earlier question that also I had for you is that investments in a way is not correlated to where you stay, right? You can go back to India tomorrow. It doesn't mean that your investments in US is not accessible to you. It's easily accessible to you, right? But do I, say few years later you retire, you go back to India and retire, right? Now your day-to-day expenses, you don't want that to be pulled up from your
Yes,
investments. Therefore you
sure.
create buckets at that situation, right? So your day-to-day expenses will be a bucket which is near to you. It'll be in a liquid asset pool next to you, but others can be anywhere else, right? Now again, when you break your investments, you also have investments in capital market, but you'll also have investments in other asset classes, right? Real estate, gold, and whatnot, right? Even for few crypto. Now where do you capture those is a question of what's your ultimate goal. If you're not very sure, don't get dragged into commitments, right? Because in India, typically that I see with NRIs is that parents in India will force kids overseas who have gone, saying quickly buy a house in India. It's very, very important, not really a pragmatic step, because you don't know where you're investing. Is it really for investment? Is it for you to stay, or is it for you to come back? When you're not sure you're going to come back, why do you need that number, right? Because
Yes, no.
one, are you getting good return for that investment? Because you're not making this investment out of planning on the pros and cons of this investment, essentially an emotional or a forced buy, right? Saying that, hey, this is our plot, buy it here. You don't know what's the growth potential there. Potentially, you may not even sell that property because it's a family asset, right? So, is it worth doing that? Of course, if the intent of constructing a house or whatever it is for taking care of family, that's a different call altogether. That's not an investment conversation. That's it's a capital contribution to whatever you want to do, right? In terms of ensuring there's a good, healthy lifestyle for your family. But if you're purely looking at an investment, then you need to see the ROI, right? When you see, how do you see the ROI? Is the appreciation that the asset is providing, rental yields that the asset is providing, and the dollar depreciation that is happening, or rupee depreciation that is happening against dollar. And overall, is it making sense? If not, then that's not the right investment for you, right? So you need to look at those asset classes. Where do you need to invest? But end of the day, you're very, very clear that I need to come back to India. Might as well have a home here for you,
Sure.
right? You can still flip
Makes
it into
sense.
a new home, etc. But you know that end of the day, you
You're
need a
going to have an
fixed,
asset. Yeah.
so
If
that's where you kind of come back and retire, right? Then it makes sense. If you're looking at it from an investment lens, look at it purely from an investment lens. Don't add emotional angle to it. That being said, when you look at the overall construct, I know I'm going around because I really don't have an answer for how you split your asset, right? Today if you ask me, I will have more than 50-60% of my investments overseas. Reason being, I see potential in overseas market compared to India market, right? That may change for me a year, 2 years down the line, right? Then I'll maybe rebalance my portfolio the different manner, right? So for each, it's different, right? It's for me, when I look at investments, it's purely opportunity cost. Where am I getting better buck for my money? If I'm getting it in a jurisdiction that is making sense, I'm able to make that investment without any regulatory complexities, I go ahead and make that investment.
if I
Therefore,
change
there's
the
no.
question a bit, if I change the question a
Sure.
little bit more on the side of like, let's say like you want to have an investment to the point where like you generate a return of like, let's say like 1 crore a year or something like that. I don't know, like
Hmm.
that's like down the line, 10 years down the line, like based on like, and then if you want to like move there, you have like comfortable investment somewhere in India that generate a good amount of money for you to like basically live a very normal life. I don't know like how expensive life has become in India, but I think definitely you need like a good chunk of money to live without doing much about it. So that like if you ever move there, you would need or you'd like be able to like survive without having to withdraw your investments altogether, right?
No, so the way you look at it again, Sagar, is very different, right? As in, this is at the time of retirement is what you want this. At that point in time, you can always move your corpus wherever it is, right? India as a country is happy to receive in as much as foreign reserves into the country, right? But the issue India has is that it's capital control, which would mean that sending forex outside of India is always controlled, right? Receiving is
Sure.
not an issue at all. And speaking of what it actually costs to move money across borders, this is where a lot of people lose more than they realize, not to tax, just to the exchange rate itself. It's the cost nobody factors in. That's where Aspora comes in. They give you a very transparent forex conversion rate, the same rate that you see it on Google, with one transparent fee. So if you're remitting to India, that's worth factoring in before you send. So from that angle, where you invest makes no difference, right? Because ultimately you want to go back to India. At that point in time, you can move that corpus to split, right? See, today, let's look at it this way, right? At the time of retirement, my usual thought process, and this is what I'll do for myself, right? Today I don't do it, but at that point in time, I'll do it for myself, is that I'll have 3 buckets for myself. That very simple thought process in my mind. I don't think I'm creating this, it's an existing strategy itself, is that you have a bucket which is for a short term. When I say short term, immediate short term, right, which is 1 to 3 years is what I would look at it, wherein no matter what happens in the market, I know my 3 years lifestyle is taken care of. If you say 1 crore is your expense per year, really, is that the number? You need to ask yourself, right? But you don't know. You're asking from that perspective. It can be, depends on what all are your expenses here, right? If you're coming back to India and saying, I need to rent a space, I don't have a house on my own, etc., then your cost can shoot up, right? Because rental becomes at least 30-40% of your typical household expense, right? So therefore, you need to have a look at it. Having said that, let's assume that 1 crore as an example in your case, right? If for that 1 crore, what I would do is essentially I'll have it in a highly liquid assets, at least 2 to 3 crores. If that is what your expense numbers looks like, right? I'll have it in liquid as pool, which will be my first bucket, right? Now, idea is that the second bucket will be a little bit more on the medium term, which would be say 3 to 6 years or 3 to 5 years bucket, where it'll be a combination of debt plus equity, right? Which is generating stable income, which I can kind of pour into this bucket to fill the bucket to keep it at 3 crores always. And I'll have the third bucket, which will be extremely aggressive bucket, which as an horizon, if I'm able to cover 3 to 6 years through my 2 buckets, I know for next 6-7 years, I don't need to touch the long-term bucket, which would mean that I can really run it aggressive and generate high alpha on it. So that pours into a second bucket, that second bucket pours into the third bucket. That way you're kind of keeping the idea is the same, right? You have your 25 multiple, 40 multiple in terms of what your annual expenses, into multiply that is your number that you look for a retirement perspective. But devising it this way, there's clarity, right? You can do all of those 40x multiple and keep everything equity. Imagine the day stock market goes down, and especially the days you're not earning, right? You will start panicking.
Yes, that
because
would
this
be
is the only source of income.
Yeah, that will be too volatile at that point.
But if you're able to split it in this fashion, essentially the third bucket can go down 30%, 40%, and as long as you have conviction, it's going to go up. You'll be fine because you'll be able to stomach that issue, right? For next 5-6 years, I'm sorry.
Yeah, like you're supporting that with time, basically. Like you're like, absolutely. It has time to grow.
See, market needs time always, right? Market, you need good returns, you need to give it time. There's no other way, right? And therefore, you need to plan it from that perspective. Now, why did I say I won't have that bucket now, but I'll have it later? Because my first bucket today is anyways taken care of from my income that I generate.
Sure.
So therefore, I need to have a very short-term, what do I call, emergency fund. Emergency fund then becomes 3 years. Today, my emergency fund can be 6 to 12 months, right? That's the way I look at it. Beyond that emergency fund, everything else I can go. I'm personally a very aggressive investor. So I'll go very aggressive from where I look at, right? If you say for my age bracket, it should be, say, 80-20, 80 towards equity, 20 towards debt. I would be at, say, I would push myself. I'm just giving an example. I would push myself to say 90-20, because 90-10 or whatever it is, because that's how I am as a person. Sure. Right? But for the others, could be you look at 30-70, whatever it is. You need to understand where you stand and then kind of put it this way. Now, the net of all of this is that your jurisdiction doesn't matter. But the time you move to India, the 3-year bucket, I would say keep it in India because it's less volatile. You have immediate access to it. There's no question that comes your way.
No, I think that definitely like aligns how I think of it. You need like a reserve of funds that you could directly access, but like you have like a long term pool to basically not even like lose on the market.
If today market goes down, because you have your primary income, which is your salary incomes coming your way, generally you'll be able to stomach losses.
Yes.
The idea of this first bucket is to kind of give you the same comfort, right? You're able to stomach
Okay.
losses because you know your sort. Obviously, when you go towards retirement, you'll generally not be in a very volatile asset class anyway. That's why this 25x or 40x of your annual salary kind of makes sense, right? But having said that, still there's going to be volatility in the market, and you're able to stomach those losses.
Okay. No, yeah, that definitely helps. Putting things in perspective in the buckets terms of like how one should think of short term versus long term.
Yeah. If this is good, we can move on to your third question that you had in terms of trust.
That has been like my star question. I want to like basically learn more on that and how one should think of that, because I don't know, like I've always thought of like, is my net worth enough to basically set up a trust? Like when should I do it? And basically how would it help me solve which kind of problem? So definitely want to like learn more on the trust side of things.
See, trust works in a very, very different fashion, right? As in when you look at it, there is a trust for everyone, right? What you look at from a trust is different from what I would look at a trust, right? Like I said, there's a trust for everyone, right? You can kind of build around that. Now, what is the basic of estate planning here? When you look at is you have a will that you create to say give a direction saying, God forbid if I'm not there, how do you ensure my assets gets transferred to my family? Right now, that's the base case scenario of how do you ensure your family get a clear access to your assets. Now your requirement could be a little bit more complex from there. When I say more complex, in this, your wish could be a little bit more advanced, right? I have a minor child, and God forbid something happens to me. I don't want my assets to go to my minor child as is. By law, they won't be able to. The guardian will hold these assets. When they turn 18 is when they gain access to the assets. Now, the big question for everyone is that at the age of 18, do you think your child should have access to this asset? God forbid you're not, right? If the answer is
Yes.
no, then who will hold these assets on your behalf? You're not there. You don't want, guardians won't hold these assets because once they turn 18, it's their asset. So who else can hold? That's where a trust comes into the picture, right? The trust holds these assets. You give your guidelines today saying that until they turn 25, 30, whatever it is, this is the kind of distribution that can happen from the vehicle for their education, their lifestyle, boarding, whatnot. And when they turn a certain age bracket, let's give them complete access. That's one way to explore. There are also other situations, right? You being in US, there are estate duty implications in US. How do you plan for it? Trust helps you with planning from estate duty perspective. If you have potential liabilities coming your way, right? You're in, as an employee, there's no liabilities as such, but say if given personal guarantees and whatnot, if you want to protect, again, trust helps you from that perspective. You're married, and can be the case for anybody else. God forbid there's a situation of a separation. How do you ensure your assets are not part of alimony discussions, right? It could be your assets, it could be the assets that you inherit from your family, right? How do you ensure that is taken care of? See, US, you have a prenup option. India doesn't validate prenup, right? So trust becomes another way to kind of plan from that angle stand. So some of these things, right? It's what's your objective, right? For some, the objective would be very simple. Listen, I don't care about liabilities, zero liabilities. I'm not worried about separation. I'm not worried about anything else. My pure objective is that I have assets at multiple places. How can I consolidate it in one place? And tomorrow, if I'm not there, family has immediate access to those assets.
Yes, and I think like the last one is my concern on like basically how do you manage
Trust
like
helps you.
yes,
Trust helps you,
across like
right?
countries.
Now,
Yeah. Okay.
so across countries, again, it's a combination of what the laws in each of these countries do. But in a large sense, you should be able to have assets, investments in multiple jurisdictions. See, it's a very simple, right? Today, how are you invest in multiple jurisdictions? Through your investment accounts. Now, simple question is, can that investment house account be housed within a trust? If yes, the trust is holding these investments on your behalf across the world, right? And God forbid something happens to you, your family has information about this trust. Good part is that trust has all the data, right? Obviously, you need to still pass on the information, but with the details that is etc. that is there, you have access to all these assets. The good part from a trust perspective is that through a will, what happens is that you still need to go to the each of those investment forums, right? Be it your broker in US, a broker in another country, to say, now so and so person is not there, I am the legal heir, this is the will, please transfer these assets to my account now, right? That is an activity that you need to do. You need to do it across, because it's not an automatic transfer. Never it's an automatic transfer, right? You still need to claim it, be it in India, be it in US, be it in any part of the world, right? Now, when you have a trust in place, the good part is you don't need to do any of these things, because the trust is holding these assets. You are part of the trust. You enjoy the benefits. God forbid something happens to your family is anyways part of the trust. They continue to manage it. You get that difference, right? You don't need to go to any of these brokerage houses, etc., to say, please transfer these assets. Not needed, because the trust is already holding it. Your succession is being run through the trust itself, not through actual transfer of assets.
Sure.
And this helps multifold. Go ahead.
Sorry. Yeah, I think the question came because of this reason of like us having like in like different jobs, having like multiple 401k accounts. I think like it just like splatter your brain out. Like basically you sometimes like leave a job, you have a lot of money from in the retirement account, then you move on to the next one, and like basically like things starts again fresh from for the new perspective. Now, not a lot of people that I saw could be like basically like, hey, I need to either like move that money somewhere else, or I need to like basically keep an eye on that account or pass that information to somewhere else, so that like basically keeping a track of like where your money is has been a hassle. I think like does trust help with like all those things of like, hey, you have like this many different accounts, you have like invested through multiple years. One thing I wanted to like do is through the trust part is like, could the time that I've invested in, right? Like basically my kids should also like basically like, should people like use or elongate the same time, so like the funds grow even more than like somebody withdrawing it and like using it right away for something else. Like if there's like definitely a need for it, use it. But if there's no need of it, like basically let it grow for like another generation or what, to let it grow even more. So that has been my angle on the trust side. Like, is that something that would the trust be able like use
100%. 100%, right? Now, it all depends on how you kind of define your objective within the trust, right? Your trust could have specific objectives, could have broader objectives. You define that, right? Now, whatever you spoke about is definitely doable in a trust. One thing which I want to put a caveat is that, will the family have complete information of the assets because it's in a trust? The answer is no. You still need to pass on this information, because if you're managing your trust on your own, then yes, you will still need to pass on this information, because they still have an entity. Now, what that entity holds is only with the documentation that is available for you, right? Not otherwise. But if you're professionally getting the trust to be managed, then the possibility that they have more access to these assets, because somebody else has, it's all about knowledge transfer, right? Somebody else has knowledge about it, and therefore able to gain access to it. Now, whether your trust you will manage it on your own, professionally manage, is all objective driven, and also has a cost to it, right? If you're appointing a professional to run it, there's going to be a cost to it. So does the corpus, does the value make sense? You need to take those calls, right? End of the day, it's all about ensuring information is available to the family,
passed on. But no, I think yes, that makes sense.
But one thing which I want to highlight here is that what you can move into trust is not everything. Your 401ks, your Roth IRAs, etc., these are all your individual investment accounts, right? It's linked to your employment. These are all linked to your individual capacity. That can't go into a trust. But what can I otherwise go into trust is whatever you hold separately, right? Your properties, your investments, those are things that can be part of the trust. So still your 401ks, etc., have to be managed on your own, and still the information has to be provided to your family so that they know where it is. So that doesn't get achieved through a trust structure.
Makes sense.
But the point here is that, whatever, these are all retirement corpuses, right? Other than retirement corpuses, what else is there that can be part of the trust?
And one question on the side of like the cost for having a trust, like does the trust cost X amount that like, hey, your investment has to be at least Y to make that expense of an X amount for a trust? Like, how do one should think of that aspect?
Got it. No, so like I said earlier, right, as in there's a trust for everyone. Why I meant that is because there's no wealth filter really. It's objective driven, right? If there are cases where I've set up trust for some families in India as well, right? Where the corpus is very minimal, but the objective is very, very clear that they have a specially able child, they need to be taken care of when they are gone. So therefore, you don't have an option but look at it from this angle, right? In those cases, trust becomes extremely crucial. We had to set it up for the family, right? It's not because there's a wealth filter. It said this is how it's being set up so that the other role players,
It can
etc.,
be taken care of in future.
the other role players come in and they kind of take care of things, right? That's one way to go about. So therefore, there's no wealth filter. But broadly, if you look at it, there's still going to be a cost, right? There, the cost, even if it's high, you're taking care of it because you're able to kind of get it done because your objective is met because of that cost. Now, the cost can be very minimal, can be very expensive, depending on who you work with and what kind of service that you need. Because at the end of the day, it's a service industry. It's not a product that you buy an iPhone off the counter or anything out of the counter, right? But having said
Yes.
that, in US, for you guys, you have options to create this online and pretty pocket friendly, right? And US is much more commoditized, very honestly, creating a trust, etc. It's a complete package. You can actually fit into those structures. But for a complex family, I would say start from scratch so that you're tailoring your requirement depending on the family requirement, right? But in a broad sense, from a US perspective, etc., you should be able to do it very easily, very quickly with a, if I were to call it off the shelf formats, right? And there are
Yes.
players who are there. I don't want to name those. You can do a Google and you'll get enough and more players who can get it done online for you, right? That's one way to go about. If I look at it from that sense, it's not very expensive. And creating trust in US is not very uncommon as well. Many families do have a trust. It could be a basic living trust to, complex trust. I see many families having it. It's not this case. If you talk about this in India, it's going to be very few. But if you look at it from a US perspective, it's not going to be uncommon at all.
Okay.
I don't think I fully answered your point. Let me kind of reiterate on that, right? Now, your cost can be very high depending on how complex your situation is. And therefore, you need to see does it make sense or not. But purely since you're in the US and you're looking at it from that perspective, I'm throwing this number at you. At as low as $300 to $400, you'll be able to set up your trust.
Okay.
Right?
And
That's your initial setup cost.
And that is just for the US assets?
Thereafter you can see what else can be housed. See, trust is like an entity.
Okay.
You have a vehicle set up.
Sure.
Now in that vehicle, you want to add real estate, you want to add investments in US, you want to add investments from Japan, Korea, China. That's depending on the other party or other jurisdiction saying, I'm okay to take this as a vehicle in for holding these assets. It's as simple as that.
Okay, makes sense. Yes,
right?
I think
So,
having India in mind complicates things in my head, so that's why.
No. So you can, right? As in, you can have a trust set up for few $100,000 to few $100, right? It all depends on who you're working with and at what is your level of complexity that you want to get addressed from.
Okay.
Right? If it's simple requirement consolidation, I don't think you need to have a complex scenario. You just pick the off-the-shelf item and get it done.
Got it. Okay, that helps.
Great. Perfect. If you're good with this, like I said, I have a rapid fire session for you. Let's get started. Number 1, the money mistake you would undo if you could.
Starting an investment account early. Like I did it. I did it, but like I took like longer time. I think like I should have like done it earlier.
You should have started much earlier. Got it.
Much earlier.
One thing you think every NRI is getting it wrong, right?
I think people in my situation, I think like buying an immovable asset, I think like I don't think I buy that. Yeah.
Got it. AI, is it a bubble or a real thing? You are in the tech world. Let me know your answer. And do you have investments in the space?
Sure. I think AI is definitely a lot real. I think I've seen its usage firsthand. I do a lot more productive work. So I think like a lot of thanks to AI, I think like it has been like much more productive. And like you could like work on like 3 different projects at the same time. And yes, we do have investment within AI space. We like there's like startups that we have funded within the AI space.
US or India? Where would you stay? Right? What's your answer?
US.
Okay. In 10 years?
I would think so. Yeah, the kids are
20 years
acclimatized.
Okay.
Yes.
Okay.
I think probably not 20 years. Yeah, I think
Okay.
not 20 years, but definitely 10 years for sure.
Got it. Property in India, asset or emotional trap?
Emotional traps for NRIs, like particularly speaking from my angle, I think like since we have a house, I think it would be a trap for me to like buy another one. But I've seen friends who has like not grew up with a house, definitely something that they should invest in.
Got it. One money task that you have not done it and you're longing to do.
Setting up a trust.
Okay.
I just like I miss like us not sometimes like missing adding beneficiaries and like not basically like having your family tied to your accounts probably could cause like a multitude of problems.
100%.
Just
Yeah.
like the worst
Yeah.
case scenarios. And I think like having a trust would
Nominations, you
probably like
mean, right? Adding nominations.
yes, nominations in India, beneficiaries in US, but I think yes,
Yeah.
definitely
Yeah.
adding beneficiaries has been like one key thing. So like trust is something that goes in my mind. I think like I want to like make sure that all the things that we have earned, all the things that we've invested, like goes on like passed down to our families, even when we are like old and go after at an old age. I think like I want it to be like successful transitions to them. So that's why I trust.
Typical advice that comes for salaried that doesn't work for you.
What kind of advice are people getting like when they're salaried? I think like is like buying a house is a thing. I don't know. Like do I just don't know. Like buying an immovable asset is something that I don't buy. So I think I'll stick to that. I think like rest of them
Perfect.
max out your 401ks, buy assets, but like don't go crazy. So yeah.
Anything else, Sagar? Anything else that we should talk about today?
No, I think that was like a jam-packed learning session for me. I think like you answered most of the question that I really wanted like basically answered, because sometimes like when you go on Google, you do your research, but like you just like don't trust it like because it's online. I just the reason like sometimes I need like people to talk to is basically like when you have like a people to people connection, it just make it
Absolutely.
more trustworthy, because I've done investments which are like robo investments. Like you just don't go and like talk to anybody. Like I don't know like who you go and like talk
Yeah.
to make some changes. So
Yeah.
that's why like I like online for sure. It makes it very accessible, but like sometimes you need like people to people connection for financial related
Right.
things. So
You need a sounding board, is effectively, right? See,
yes,
today's
yes.
world, many things are there on the internet, right? Whatever I told you in terms, even for a trust, it's not that you won't find this online, but the only what value really I bring onto the table is essentially the experience dealing with many families, what they have done, right? And what
Yes.
that could add value to you, right? That's broadly what will come my way. It was wonderful talking to you, Sagar, but was lovely to have you here. I love the conversation through and through. Especially your journey in terms of how you're going about your Gujarati blood in terms of how you're managing money. I think there's a different perspective in which you're looking at it. I understand where you're coming from. I think it's a good conversation.
No, yes, I think like definitely the conversation has been like fantastic. Get to know you more. Definitely, I think like we are very much aligned on the investment side. I think like aggressive is like what I like, and I think since we have time on our side, we definitely be aggressive. So really nice chatting with you. I think like learned a lot, and I think definitely look into like the trust side of things. I think there was one key aspect I was really looking forward to understand and talk to you on that.
Great. Since you have a takeaway, that's a win for me in the whole conversation. That really helps. Thank you so much.
Yeah, thank you so much, Nikhil.
That's it for this one. If you're looking to send money back home, Aspora's link is right there in the description. Go check them out. And if this helped, hit the subscribe button, and there's a lot more of these conversations coming your way.